Welcome back. Good afternoon. What's going on? What a day. Most of our fun has left after the open. We've gotten continuous melt up during lunch, coming into close, still trending to the upside. Spreads are getting a little bit wider with volume coming in. On the individual level, some tickers coming in and making some extra gains at close that weren't getting all of it at open. Brian mentioned Blink, for instance. Blink didn't get it at open, got it at close. Again, just depending on the institutions involved. Some of them are buying it open, some of them might close. How do the mega caps work? The opposite. Open, make the move. Close, there's still gonna be plenty of volume, but it's not, it's not the same as putting long positions on, right? We get 7 minutes. We'll see what the action is here. We've got we have the idea in place, right? Ideas in place. All-time high, non-stop spending. It's almost like a year ago, right? It's almost like a year ago. What's going on? Well, maybe not one absolute year ago, but going into last summer, all-time highs, government spending an infinite amount of money, the usual. And this time, fiscal stimulus. So Biden's, again, from open, Biden's plan comes out, and we see an obvious reaction. Things on the infrastructure side all jump up today. Why? Well, they've been moving to the upside this whole time, speculating on the move. Now we get confirmation of the actual bills coming set forth, the amount of money. Okay, well then now we can price in that, and then price in what's going to come next, right? It's mostly all clean energy and not so much EV oriented. So, for instance, Tesla's not going to. Yes, it benefits Tesla, but it's not specifically towards Tesla. So it's not like Tesla's should be getting a bunch of points because of that, or anything along those lines. But certainly on the spending side, inflation, appreciation of equities, that's how it works. Some take profit on the big boy side. See if we get a bounce here. Take a look. 5 minutes. Should be just taking into support for sure. Do not expect. Again, I do not expect a change to be made. That's for sure. That is for sure. Just the megas. Again, how silly is it that when we look at our indexes, they're determined by 6 tickers? Oh well, what can you do? See how this holds here. Apple up over 2% today. Again, difficult if you're not just preempting these moves. We have seen plenty this week. We'll look at individual tickers in a few minutes here when the market closes. But again, it's the same as Monday and Tuesday as well, right? Where there's just tickers that are on their own velocity. With the market moving with it, though, it just helps it, right? It really broadens out that move. Instead of the last 2 days trading sideways in the market, this day today helps it from the start, right? You get things like Apple's moving. Well, that makes something like any of these other tech tickers on the growth side move a lot easier, right? This is just, okay, well, if everything else is moving, well, then there's just broader demand, right? Let's see, hold on. Nice bounce on support. Time do we have? 3 minutes. Well, thanks. Pot stocks continue today, right? Okay, we already knew. Why are they going up today? Who knows? People like to wait until things happen. GRWG, 12% today. Another big move. Solar, everything. With Biden's bill, but continuation anyway of the same idea. Semiconductors, all these things. Semiconductors getting some of their own bill, possibly. Again, semis in clean energy, especially the solar side, are tied together because they're sort of the same thing. But we've talked about the separate. There is a difference between those two of the government spending. a lot more money on the solar side, of course, clean energy than semiconductors. But even Biden coming out today saying 50 billion to semis. Okay, perfect. Make some more chips. Okay. It seems like at this point the government's paying its citizens, paying the companies. Do we all just work for the United States government? Are we just employees? Like, are we really just, is it that we're all on the same team? We're all citizens and a part of the country, or do we like actually work for the government? Is that what's going on here? You know? Vaccinations to track my movement instead of using my iPhone, obviously. Really makes you think. I've lost everything because of the Suez Canal. I'll take a look at that in a minute. How? I'm interested. I'll take a look in a second. Did we get anything changed? No. Let's see. Some take profit here. No. COVID winners. Same as the rest. A very average ending day. I actually thought we weren't going to get take profit at close. I thought it would look a little different. It does in some areas. But I would say very average bullish day where you get that all bid open, melt through all lunch, and then take profit at close. I mean, it's just about as normal as it gets, folks. About as normal as it gets. I was thinking a little bit more, less of a trend, or less of a bid here, and start to melt and roll over a little bit and start to go like this. Finish it like the same spot, but instead we get the normie day. The normie day. The 2% on the NASDAQ into take profit close. Yeah. There she goes. Closing. Okay, let's see what we get here. Okay, hold on. Okay. Nice day. A nice day. Let's start with the growth side. This week, talked about growth needing to have a week. Needs to have a week in the sense that our sort of conclusions, some ideas we had, things that we wanted to get confirmation on this week, was that equities are risk on, and they were not going to be affected by yields like from here on out, right? What's been happening? Well, through all this area, yields have negatively affected the growth side, right? Because again, inflation is going up. This causes the dollar to rise a bit. It causes the cost of capital to go up. It discounts future growth with the yields increasing, right? Which is not good for the growth side. It's going to make prices come down. And so every time yields would spike, growth would come down. Yeah, we had some violent things like NASDAQ up 4%, and then it would get, again, beat up by yields. Minus 3%, minus 2% over here. This week, what's happened? Well, today we had a spike in yields. And do you know what happened when we had a spike in yields? Well, none of this happened. This selling didn't happen. Instead, we put 2% on the NASDAQ. Now, we closed at 1.5%, but we were up 2%. That's the exact opposite of what we've seen. That's confirmation of the idea that growth was not going to be negatively affected by yields this week, or just really going forward. And so that's a great start on that, for that. Let's just call it a bit of a theory now that equities are risk on and they're not going to be affected by this idea because it's a baseline. We understand, okay, inflation's there. Okay. Where's there's going to be appreciation? Okay, that's it. There's going to be spending. Spending is good. Spending is good in a lot of different ways. It's going to get the economy going. That's the inflation part, right? But is it really that negative? Maybe this pricing here in the tempo lost was everything that needed to be priced for that loss, right? That was it. Now we can go back into our normal sense of things, which is just a trend up in a market, right? And that's what we see here. We really do see that from last Thursday, this trend. Is this any different than over here? Right now, it's not different. Sure, in a short-term sense, it's not different. It will be different if it continues here. What's the difference? The difference was just that reaction to yields. Everything moving together. It's not like value is moving against growth. Value didn't move as quickly today because, again, growth was getting a lot of demand. That's how our market works. It's usually not all at the same time, especially when there's macro things involved like spending and everything else, right? We have all kinds of different things come out. And especially when you look at the actual tickers involved here on anything on the value side, you actually do see all of those spending planned ideas getting priced into tickers, but it's on the tail end. We've already seen those price moves happen. So something like CLF, we talk about X, right? The idea of these, right? This was already getting priced before this plan became out, right? But we still see more of it coming in today. Another 2% on X, right? CLF catching up to X here. All of the other infrastructure companies, right? Catching up, but we've already seen that speculation. And so growth is moving at the same time as this inflationary idea. And so that's a difference. That's completely different. That tells us that equities themselves are risk on. Think about this year so far. When have we really, truly not been risk on? Okay, tech sold. Okay, tech sold for a month. Were we never being risk on during this point? Were we not being inflationary in general? What about Bitcoin? Here's a good question that I was thinking about today during lunch. Sipping some coffee, enjoying the day. When we look for inflationary, the inflation numbers, right? We look at housing prices, we look at cost of goods, right? What about the $1 trillion crypto market? What about the fucking NFTs being bought? Where are those? Is that not speculative risk-on behavior that's inflationary? What if you put that $1 trillion on the housing or on the cost of goods? Would that not signal to us that inflation is going up and spending is going up, right? People are just spending their money in a little bit of a different way, right? And I'd made this comment the beginning of this week, is that everyone's a trader now. Everyone's an investor now. That's going to cause prices to keep going up because there's more people in demand of something that, again, there's only a certain amount of shares out there. It's only a certain amount of options. Prices are just going to go up by the fact that everyone wants to be involved. That's an inflationary idea. It's always going to appreciate, right? It doesn't change anything. And especially with more and more people coming in, these are ideas that you're not going to see in the economics of anything, right? That's something that's not being priced. But it's also an example of how, when we're now where we are, that all these things are moving together, that this is risk on because people are willing to spend money over here, right? People are willing to spend money here when they're willing to spend money on infrastructure, on Bitcoin, on NFTs, all these different things, right? That's exactly where the idea of being risky, what are we doing then if we're not being risky, right? Everyone's being risky. That's the whole point, right? And so when you think about some of these different things and add them all together, it's not so much that we're now doing something completely different, but we're not reacting in the same way, right? We're buying everything, and it really comes down to that, right? Are we buying right now? Okay. You could have bought anything since last Thursday. You would not have lost money, right? You would not have lost money. Today's another day that confirms that, right? That was it. That's it. Today's just another day that confirms it. All-time highs on the S&P, all-time highs on the Dow, NASDAQ. We'll see how long it takes for it to catch up. When you look at things like Apple today, right? We have a ton of charts that are breaking a macro trend line right now, right? Especially on the growth side, because these have been consolidating for a while. This chart's terrible. Most of the charts are terrible. But a lot of them are breaking this here today, right? We looked at Tesla as well. Tesla's another example here. Is this not the opportunity, right? Is it not the opportunity here? We've talked for the last week or so of this idea of coming down to support and trying to aggressively preempt moves. Is this not the idea we were looking for when we talked like that, right? It is. It does. I mean, again, not hindsight capital. No, since last Thursday, we've been buying everything, and we were watching and waiting for growth to pay us on that idea. Value continues to move, right? We're doing fine there. Again, energy is having a multiple different reactions due to different things. But semiconductors, these kind of ideas, right? When you look at that space and you look at some of these, right? It's all coming together here, right? You have mega caps, Mega caps make up the whole average. The average isn't going to move if mega caps don't move. So the FANG stocks, okay, they're moving, right? Semiconductors already should have been moving because of supply reasons, right? We saw a lot of that on the breakout early. We saw it continue today. It wasn't that mega caps took away demand from semiconductors here. No, they didn't. These continued as well, right? If we just look at an average SMH, it continued here, right? This is a lot of points. It's not just so much what the price is. It's that the movement and when it's happening, how it's happening, right? It's the fact that this continues to trend. A trend it's more than just something you look at intraday. It's more than one day, right? Where a lot of different things could happen in one day and there's too much variance. But when things happen over an entire week, right? So from when we have these ideas from back here and this continues to trend and we see this across the entire market, that's a trend. That's an entire market having a belief in, it's telling everyone in price exactly what we all think. You don't trend unless there's a reason to trend, right? Things can happen in a day that just don't exist anywhere else. And they're just one-offs. You have to trust this trend here, and especially again with the yields, everything you see a little spending coming in. And one big thing on a macro sense that we have really left out of like an equation because we shouldn't really have to bring it up. Guys, vaccines gonna end COVID. Vaccines will end COVID. That's a reality. Will COVID exist? Yeah, probably. The flu exists. That's probably, but the economy and everything's going to open up. Vaccines will solve that problem. So there's still this really strange thing going on because you look at it and you see like France is shutting down today and shit. Do you know why? Because we have all the fucking vaccines. We have literally bought all the vaccines and we're the only place that's just vaccinating everybody, right? It's a really hard thing to like conceptualize, but this is also where Wall Street has like this issue right here of why we are having so many negative reactions. Is because we're kind of flabbergasted of how quickly it took to just do this thing. You know, Biden was coming into office, right? He said he'll do 100 million vaccines in the first 100 days. 50 days went by and he got 100 million vaccines. And now he's going to do another 100 in the next 50 days. You've basically almost vaccinated every single citizen in this country. And now we're all staying around with our dicks out going, what the fuck are we doing? It's because we were not prepared for it. Neither is the markets, right? Neither is the markets because it feels so silly, right? Doesn't it feel really silly that for a year we've been stuck, haven't really been able to do what we call normal things. And now in a very short amount of time, things are normal and the economy's heating up. Weren't we just bitching almost 2 months ago? We were just complaining 2 months ago, and now it's past us, right? That is a bit of a shock in a market, and why you're starting to see it's like something like what I've said about X is that why are we now just seeing like the buying come in when we already knew this shit, right? It's the same with things like travel, right? Why are we, what is the whole issue with pushing the price up of travel when it hasn't even retraced to its value before COVID? What is the whole issue? Because it's hard to get past the idea because we're still in it, but it's now happening so quickly we don't know how to also push our own mentalities out of it, right? And the same with the risk on idea, right? Think about how crazy so this is the end of the quarter, right? And I've seen some different articles about it, but just to like put our own thoughts on it, this has been a wild fucking quarter, right? We've seen some pretty insane things in the market happen. Think about this quarter so far in the market. We've seen GameStop do its thing, right? GameStop. We've got cryptos going insane. You've got NFTs, people buying hundreds of millions of dollars of dumb shit, right? That have no true value, just buying it to buy it. You've got, so again, this whole madness. You've got the whole value side of everyone just betting on the economy going up, right? So you have travel, you have things like, you have things that were literally worth nothing that are now up a significant amount, right? You had things like Viacom up here, and then also just crashing this last week because of people making mistakes, right? There's so many things that have happened this quarter, right? And then all the vaccines, Biden passing like hundreds of fucking bills all in like a short amount of time, and we haven't even fucking paid attention. I haven't even watched the news to see what the fuck they're doing because I just like, I know they're doing shit. That's not how we were before, right? And so there's that idea we are a really well-oiled machine, right? Our our fucking economy and the whole way the United States works is that we're just a fucking machine that as long as we're moving, right, and doing things, then it just keeps going. And even if something's not that great, the fact that you're doing something just makes it fucking work, right? And so we're just spending fucking money left and right. None of it's a problem. Everyone's getting fucking paid. There's so much going on all at once. You have to remember what the result of that is going to be. There's so many things that are going to come from that and from all of this spending, right? Do you really think so? Here's the other part to get into as we sort of touch upon these spending things. How are they paying for spending? The macros do matter because again, we're going into all-time high and it's going to be a question. How are we going to pay for all the spending? Well, we're going to raise corporate taxes and taxes on the wealthy. Now, why is Wall Street not complaining? Why did they want Biden and the Democrats to win? Remember all the blue wave bets, right? All the blue wave bets in here, betting on a blue wave, betting on Biden, Georgia runoff, right? Why does Wall Street want them to win? And why are they okay with all the spending if it's going to raise corporate taxes and taxes on the wealthy to pay for those things? Because, why? Well, if all those things are happening, do you remember when Reagan said trickle down economics, but all the rich people knew that that was a lie? Because what? Oh, because it's the opposite of that. Maybe if all the people that are not in the very 1% spend their money, that goes up to the people in the 1%. Maybe because it's trickle up economics. Is that what it is? So what happens if you just give people just a little bit of hope and a little bit of, you give them a place to live. You give them enough money for food to survive. What do? Well, they're happy and they start spending money and they do all kinds of shit, right? Maybe even opening up their economy, getting them vaccinated so they can live their fucking life. What's going to happen? That money is going to turn into rich people's hands. Also, what does it do? Investors' hands. What happens in the market? Oh, the market keeps going to all-time high. Kind of like how the market just continues to trend up even though there's all kinds of problems, right? This is money that translate. How much is the difference? It's like 22% to 28%. Do you really think that 6% isn't going to be made up in the fucking market at least? At least? Or how about this? The government is quite literally paying corporations. Microsoft getting deals. There's even on the private side, even if we don't talk about the public side, semiconductors, 50 million to semiconductors, $2.2 trillion to clean environment, right? When we talk about things like clean energy, solar, all of that is getting paid for by the US government. A good example, SpaceX. SpaceX entire funding makes almost as much money as Tesla does. It makes way more money than Tesla does on a profit standpoint, but in terms of revenue, makes as much as Tesla does by government contracts, right? All these private companies getting money, that is money that who gives a shit if you're going to raise my taxes, right? If you're going to be spending money and then people are going to buy that right there. Do you know what one of the best statistics that are out there, and that's so true, is that most people, they look at their pensions, they look at their 401ks, right? They're looking at, okay, how's the market doing? If their pensions, 401ks, just any of their investment-driven vehicles are going up, do you know what they do in reaction to that? And you can Google it and you'll see that there's so many documents about it. If that is going up, do you know what they do? They spend their money. They spend their money. That's it. And so all that needs to happen, why do so many companies do buybacks and everything to push their price up? For that very reason. That's it. You push the price up. Do you know what people do? They spend money, right? This is where when we get up here, we're going to do the same thing. We're going to have fear, anxiety that we're an all-time high. There's just a bunch of spending. There might be some selling of news. Again, though, we just confirmed again. We did all this buying here, preemptive buying on the tech side at a low where it was anxious. And look what we're doing. It's only one day, but it's more than one day, right? And it's important to keep that macro standpoint of everything that's behind that. We trade on a very short-term technical level, but we use the macro ideas to justify why we're doing it and why we're putting our money in the first place, right? Bibbs, what'd you say? What do you normally read for investing/trading that you can really recommend to buy and read? I don't really, I read, Financial Times, Wall Street Journal, Bloomberg, but I make fun of them more than I really accept them because it's just a journalist, right? I just watch price, right? There's there's nothing really to read. I think some of you have had this problem where it's like, what do you read about investing and trading? People that are investing and trading don't write books. You know, the only book that was written about any of this, especially on the option side, Options and Volatility and Pricing by Nattenberg. And you know how long ago that was? That was a really fucking long time ago. There's really actually nothing to read. And that's where, when you think of self-help, like the only thing that you could go to would be self-help books. You know what this is like when the idea of like entrepreneurs wanting to do something. You know what the worst thing that could possibly happen is that you want to be an entrepreneur and you're reading a self-help book, right? That means you're not going to be an entrepreneur and you're never going to be successful, right? If you need a self-help book, I would say trading and investing is the same way. There is no such thing as reading a book. The Nattenberg book about options is all math, has nothing to do with like there's some psychology ideas, but at the end of the day, it all just comes down to actually doing it, right? So there's nothing I read. There's really nothing you can read. It's just by doing. It's literally by hours of trading and looking at price, right? Otherwise, again, it's the other angle from like what you're maybe probably speaking about is just every single day I'm going to read Financial Times. I'm going to read Bloomberg, even though I make fun of it. I'm going to read the Wall Street Journal, right? All of these things matter. Everything that's going on in the world matters, right? And I read you're going to read it all day, and you get a perspective on everything else, right? But it doesn't, I guess it doesn't really affect an entry and exit sort of point of view, I would say, right? So I'm not sure if I can get, that's just the broad answer, right? There's nothing in terms of investing for trading. I would say there's no such thing as read Benjamin Graham, right? Yeah, I read Benjamin Graham. I've read all of Securities Analysis, read the whole fucking book. Did that make me better? I don't think so. Maybe because you separate the two of what you're doing and what's being read there, but it's not really one of those things, right? It's just always living and breathing it. I always talk about that. Me reading all those things every morning, and now I have someone else that can read it for me and give me a summary. But the whole reason of doing any of that is to just live and breathe the market, right? Because even when you're not watching price, which I don't do during lunch usually, I can read about it and see what other people think, right? While keeping my own opinion, right? That's like the important part of it. Less of actually making your opinion. That's why I hate Twitter. I hate the whole Twitter thing where people now they go to Twitter and get ideas from Twitter and then think they can trade it. That's garbage, right? That's garbage. That's the whole echo chamber idea. And that's where I can feel it in myself, especially when we first started this group like a year ago. When that first started, we had like 1,000 people in here. The whole problem was that everyone wants to go into the same idea. And then just by reading that, it gets a seed into your head and you start to think about that. That affects everything that you do. And it could be just a small thing. And then you ask a question about your next trade and it turns into something else. And then you just want to do what everyone else is doing. Right? It doesn't work like that. There's very specific things. That's why we have a different method. Why the method's successful, right? It's always just by solving problems, right? All right, let me look at profit. You have a more specific question, let me know for sure. Tiger with another 900. He had a great day yesterday. EVs, he's definitely happy. He's got his EVs going. Let's all, we don't need to hope. Looks like things are going to the upside. Looks pretty damn good. We've been trading value through all this time, trying to get in here every now and then. Now we finally, we went for it. Take those trades. A lot of different ways. Neo, for instance, too. I know that's what he's a part of. So seeing these here looks pretty damn good, right? So nice on him. Holding those. Brian, he already left. Plus 140. Good number for him. Mint with the 81. Sounds like he was hanging out today. C-Trader with another 464. Gains came from the new entries after big day for positions yesterday. Yeah, he had a big day yesterday. Awesome numbers. Spoon with a 16.3% gain. Pain from the last week paid off today. Got stopped out on some recent entries, so I have room for possible ideas for tomorrow through the weekend, but I'll defer to Don's opinion on that to inform my risk tolerance. Also, since it's banking holiday on Friday. It's a good thing to note, banking holiday on Friday. So tomorrow, what's tomorrow? Tomorrow's our weekend day. So that does throw things into a little bit of a loop. We'll talk about it tomorrow at open, right? Awesome number though, Spoon. That's fucking awesome. 16% is a giant number, especially for a portfolio. So that, I mean, it scares me when I see something like that. But if it's positive, then it can only be good, right? Awesome numbers, guys. Let me just talk about like some individual things that we maybe didn't touch on. There's so many charts that look like this right now, right? I talked about it a little bit earlier, so I made this comment earlier. Okay, a lot of charts are doing this sort of bouncing on support and growth is coming out of the low, right? The thing not to do here is that those of you that have not captured this move, so I'm talking from Thursday and Friday last week, I'm talking about buying everything, and we're buying everything, right? Not just saying it. That's the whole point of what what we do here. We're doing it in real time, so we're buying everything. And then this week starts. Monday is bid. I mean, forget the market in the sense that the market was trading flat Monday, Tuesday, and then today it was bid again. But everything was basically bid on the growth side coming out of Thursday of last week into today. It's been basically just trending up to today. Here's something not to do, and it's going to be really hard for even myself not to do, is that, okay, you have all these tickers that look like this. You look through any of these charts, if we literally just run through here, almost everything is going to look the same with this sort of double bottom as coming out of a downtrend, coming into the next upside, right? They're all basically going to follow that same idea because that's where the market is and been doing, right? Let's see if we can get an idea of one here. What you do not want to do, I'm going to have to just make an example here. Okay. What you don't want to do here is that if you have not been able to get into a position here, you don't want to then find a ticker that also looks like this, but has not came off this low yet. It's been, let's say this here, this didn't have a candle here on net, right? Now we like net. It's pretty good tech ticker. We've traded in the past, a lot of volatility. Let's act like this candle's not here today, right? And it's still down here. Some other ticker is still down here today. Didn't make any move. That's not the ticker to be buying. It's not, because there's too many that have moved already. I would rather go buy this here tomorrow than buy a ticker that's down here today and that didn't move from last Thursday. It's just been trading flat. It's not a it will catch up factor. It's not going to move as quick. We're not betting on whether it's going up or not. We're betting on how fast it's going to go up, right? Again, if you're trading options, that's all you're doing. You don't have time. There are times when we trade things that are trading flat, because think about it. Last week on Thursday, this is all you had. And we had to trade on lows, and we had to trade on flat trading. Apple, you had to keep getting stopped down, try to make the trade. But now where it is, it's, again, if there's something down here today and it's not up here like this, then it's still better just to buy Apple. So again, this is where we're not average traders. We're not going to trade the average. There's times when we use ETFs, maybe for different reasons. You do not want to be trading something that's down here, because here's what's going to happen, right? I've talked about the idea that if you're already in a position, it's a lot easier to manage it, right? I'll just keep using the X example because so many people are in it. It's so much easier if you already entered down here, right? This is when we were buying everything. Now, I'm not just saying it because it's up here. I'm just using an example. If you're in the position here, it makes all of this very easy to manage, right? You can basically get out and nothing's really a mistake. Think about it in the same sense, though, that if you're waiting to enter something because it's trading flat and you're hoping this is going to happen, if it doesn't happen, it's really hard to manage it. And that's the problem if something's already happened. You're not going to buy another infrastructure like some other steel ticker that hasn't moved yet if this has already moved. It's really easy to get into the sense of get into a position where you'll say, well, these companies are basically the same. This one's 20% ahead of it, but I bet the other one's going to catch up to it. Sometimes that's the case. That should not be your prerogative going tomorrow and pushing trades over the weekend. It should not be, because it's not going to, again, you want to be trading the leader, not the one that's behind it. We're not trading on if price is going to go up in the future. Price is going to go up in the future. We know that because of inflation, right? You're trading on speed, and a good example of it is the Dow play, right? Okay, tomorrow's April 1st. I said Dow 34,000. Let me use DJI. I said Dow 34,000 by April 1st, right? Now, we finished about 2% below that, right? But we got a lot of it all at once. And so I want to use this example of how this play did not, well, first of all, the play did work and pay out. But I want to give you an example of how this target and how the idea of trying to make a trade, in the sense of what I'm talking about, may not work. So, okay, here you go. DJI, okay, 34,000 by April. I said this a month ago, right? A month ago. Okay, so from this move here, right? Where is 34,000? 34,000, 3% now because we took some profit. Okay, there you go, right on the 9. 3%, right, from here. Okay. Is that okay? Is it okay that it didn't get to 34,000? Now, here's what I want you to think about for an example. Okay, this is large cap value, right? Now, you've missed the value move, but you see how inflation's working, that all equities are risk on, so you want to get some exposure to it. Are you going to are you going to buy something that has not made this move, but you want it to make this move, right? You see that, oh, there was this whole gain in here, value's pretty good. So I'll buy the one that's still down here, right? An example would be, there's plenty of examples. We don't need to get there. Say your chart didn't do this. Your chart didn't do this when the Dow went up the first time, and it was still down here. It's still down here. Are you going to buy that, or are you going to buy the Dow? Literally just the average. You would buy the average because it's already bullish, not the thing that's down here. The bottom fishing idea is too long term. You're trading for speed. I would bet on this, even though it's all the way up here, over anything that's down here every single day. And not even just because we have some sort of expectation here. And again, here's the ETF just to put it back in everyone's mind. This here, betting on this speed, this reached there, right? This is it. That was the whole thing, right? That whole move is the thing. That's going to continue here, right? You don't want to be buying, though, something that's not making this move. And so this is where the value part comes in. I saw on Twitter, right, is that this happens. And then as soon as there's things that are not up here, it's like, oh, that's not very good anymore, right? How is this not very good, right? How is this not very good? How is this not bullish? This is at all-time high. It's really easy, though, to go, well, you know what? This is just better. This is just better. This is not better than the value set. It's not even close, right? So again, it's really important that even though we have this bullishness here, this is still not more bullish than the Dow that's at all-time high. Even if things didn't reach a point that I talked about, right? So tomorrow, when you're looking to put positions on, I'm talking to the people that have not entered anything, and that's basically nobody, but just to put it in like looking at a chart through the lens of trading, this is still not more bullish than this is. Okay? This is probably twice as bullish as tech still, right? Here's the all-time high from prior that the Qs have, NASDAQ, right here. And the Dow is 20, it's like 10% higher than that, right? Keep that in mind still, because again, we're doing this thing again where, and I'm doing it too, where we can look at things like this and say, oh, this is the other chart, oops, and say, oh, here we go. But guess what? It's not here we go. We're attempting it and we're trying to preempt it. There's a big difference between us trying to preempt this move and things that are actually true and that we know are already true. That's how do you know if something's bullish when it's already made the fucking move, right? You don't know if a chart's bullish unless you can see the damn candles and it's already happened, right? Hindsight capital, sure. But the only way we know something's bullish is that it's already happened. This has not happened yet. This has not happened yet. We're betting on it to happen, but it does not make it bullish, right? Those are two completely different things, and something really important to think about, that just because things are at low and we're buying them, yes, we're buying them to capture the move. That does not make it inherently bullish, though. This is still more bullish, and it will be more bullish until this is not moving comparatively to the growth side, right? And if they're all going to move together, the equity side, you're still going to favor the leader, and this is the leader. Until this is not the leader, then well, as soon as this is not the leader, then we'll go with growth as the highest basically percentage of what we own, right? But until then, it's important to still keep in mind that this is the leader. And that's where you're going to be trading through first, right? Keep it in mind for tomorrow. Tomorrow might be one of those days you're going to get take profit, right? Nasdaq's going to get take profit on this move. You're out of resistance again. It's likely to be different than this time over here and this time here, right? That's the whole idea. We're betting on it to go further, but still don't get lost in sort of the moment, taking profit on all the things that are bullish and are bullish, proven to be bullish because of some hope over here. There's speculation here. There's not bullishness here. So keep that in mind tomorrow. Something that I'll bring up tomorrow, because again, it's going to be Thursday is going to be the last day. There is no Friday trading, so we get a long weekend. That shouldn't affect. It was not going to affect anything. It doesn't change anything. Just a day that's not here. It is April Fool's Day, so come with common sense tomorrow. That's probably going to be an important thing. Those of you that are very gullible and fall for things very easy, like if I say we're going to do something and then you have to ask chat if that's true or not, you guys are going to be targeted probably. It's April Fool's. We're just going to be having some fun. There's probably, again, we've had 3 really strong days of active trading. And tomorrow's probably going to be today was pretty lazy after the open. Probably going to be like that a little tomorrow. Have a little bit of fun. Have some fun, right? Have some fun tomorrow. So it'll be a long weekend. We can all enjoy it. So let me know if you guys need anything, have any questions. There should be quite a bit of charts tonight. I've already looked at some stuff over lunch. Most of them finished where I thought they would. So expect some good charts tonight. Come up with maybe a trade for the Costa Nostra account for the weekend. That'd be cool. You got $4,000. I'll post it in there. I'll see you guys in the morning. Enjoy your afternoon, your night, evening, wherever you are. And until then.